Facing conflicting factors including high inflation and a sluggish economy, South Korea's central bank freezes its key rate for the second time in a row at 3.5%. Now the rate gap between U.S. stays at 1.5 percentage points. Our finance correspondent Lee Rae-hyun has what this means.
The Bank of Korea has decided to freeze the key interest rate for now. The central bank announced the decision during Tuesday's Monetary Policy Committee meeting, keeping the base interest rate at 3.5%.
Considering inflation forecasts above the target level and financial risks expanding in major countries, we've decided to freeze the base rate and closely monitor the inflation slowdown and other economic uncertainties.
This is the second time in a row that the central bank has decided to keep the rate unchanged with a 3.5% base rate in place for almost 3 months. Analysts say stabilizing consumer prices in South Korea was the main contributing factor behind the decision to freeze rates. The Consumer Price Index, a key gauge of inflation, rose 4.2% on year in March, marking the slowest annual rise since March 2022. Worsening economic indicators, too, are mentioned as among the reasons for the central bank's decision. The country's GDP growth rate shrunk by 0.4% in the fourth quarter of last year, mainly due to sluggish exports. The central bank, meanwhile, expected the country's GDP growth for this year to be slightly below the recent forecast of 1.6%. The balance of trade also recorded a deficit during the first 2 months of 2023, in the red for 2 consecutive months for the first time in 11 years. The global economic crisis caused by the collapse of Silicon Valley Bank and the liquidity crisis of Credit Suisse were also considered factors that stopped the BOK from imposing a rate hike. With the central bank's decision to hold the rate, the interest rate difference between South Korea and the U.S. stays at 1.5 percentage points. The last time the gap was so wide was 22 years ago.
This can spark concerns about foreign capital outflow, but the market sees a rate difference of 1.5 to 1.75 to be safe, as investors not only consider base rates but other factors. Now the government should think of more ways to respond to the strong dollar amid continuing trade deficits.
Although the market widely expects that this freeze indicates the end of rate hikes, the Bank of Korea says it's too early to determine the chance of rate cuts, leaving the possibility of more rate hikes in the near future. Lee Rae-hyun, Arirang News.